Welcome back. You're still tuned into MF Corner. We still have with us with our guests Tarun Birani and Varun Fatehpuria. This time we are going to focus on overnight funds. So, we talk about long-term investing. We talk about asset classes where you can make multiple amount of returns, but that is over a period of time. Let's talk about what do you do when you have to park your short-term funds. And that is where you can look at liquid and overnight funds. So let's get the basics out of the way. Varun, let me start with you. What is the idea of liquid funds and overnight funds? Is this suitable for a retail investor overall?
So, Sonal, liquid funds, overnight funds, both are, I would club under cash management solutions for retail investors. And it is really a good solution for investors looking to park their short-term idle money, what would have perhaps been kept into a savings bank account, or even for that matter, a short-term fixed deposit. People having that sort of a time horizon anywhere between, let's say, even a week to about 90 days, 120 days, they could look at liquid funds and overnight funds. What investors do need to keep in mind is that what they are able to achieve with a bank account or a fixed deposit, which is a high degree of safety and a high degree of liquidity. Both of those aspects are met when they are investing into a liquid fund and an overnight fund, and provide a significantly higher rate of return, at least in the current interest rate cycle.
Okay, all right, take that point. So this is what overnight funds and liquid funds are. Tarun, let me come to you. When do investors then look at liquid and overnight funds? How can they go about it? Because this is not your generic mutual funds where you can invest your money and forget. So what is your suggestion here?
Yeah, so I think liquid and overnight is mainly for, so in the wealth bucket, you have three buckets, right? Safety bucket, stability bucket, and aspiration bucket. So safety bucket is you want to make sure that you have a contingency balance, your emergency fund, your short-term funds, your temporary parking of funds which you may require in short term, right? All those funds are the one which are recommended to be invested here. I think in terms of selection, you need to select the fund which is offered by most of the top fund houses currently, in both in the liquid and the overnight category. Liquid funds are mostly in the funds with the securities are taken within 90 days or less. I think those are the security which are taken in liquid fund. In the overnight fund, these securities are in the overnight call market, which is one day call market. So the returns are different for both liquid funds and overnight fund, with overnight giving lesser return because of the short nature of the investment. Again, in terms of selecting the fund, I have seen most of the returns of liquid funds and overnight fund of most of the peer groups have been more or less closer to each of them. So you should pick up the fund house which you are most comfortable with the parentage, and as per your convenience you can pick up. And expense ratios also need to be considered, because some funds may have higher expense ratio which can impact the overall long-term returns of these products. So those also need to be considered, and my suggestion is to monitor them also as we monitor any other fund, because it is important to, and I have seen particularly in the times of, let's say, 2018-19, in the ILFS crisis and all those times, I think there was mismatch of securities in the portfolios also. So it is very important to keep monitoring all the investment which has been done.
Yeah. Okay. Yeah, it makes sense. The total expense ratio would be different. Every asset management company would be different. So those are some aspects you need to keep an eye out on for as well. Varun, Tarun mentioned briefly how the returns are between overnight and liquid funds. But can you give us an average return? What does it look like for both these categories?
Yeah, so overnight funds today, Sonal, are ranging anywhere between late 6 to about early 7. And liquid funds are in the range of about 7.4 to 7.5% per annum. What investors do need to keep in mind is this is in the current interest rate cycle where the repo rate has been hiked by about 250 basis points over the last 2 years. And the returns that are made by both of these funds track the interest rate cycle, because essentially they are investing into underlying securities, which could be a commercial paper, which could be a certificate of deposit, which could be a T-bill. All of the returns are actually tracked and linked to a repo rate. So in the current interest rate cycle today, you are able to easily generate more than +3 or +4% relative to a savings bank account, which will give you about 3.5% or even for that matter, a similar tenor fixed deposit, which will not yield you more than 4%, right? So for investors having time horizon north of 15 days to about, let's say, 80 to 90 days, 100 days, overnight liquid funds both could be a very solid alternative to a bank account or a fixed deposit.
Actually, that was going to be my next question, but we'll discuss it in greater detail. We have to take a quick commercial break. On the other side, we'll continue our discussion with Tarun Birani and Varun Fatehpuria and understand more on overnight and liquid funds. Stay tuned for that. Welcome back. You're still tuned into MF Corner. We still have our guests with us. We are discussing everything about overnight and liquid funds. Tarun, let me come to you. We discussed this. What are the returns like in liquid or overnight funds? So should one go for a liquid fund instead of parking their money in a savings bank account?
Yeah, I think it makes a lot of sense to invest in liquid fund because compared to the returns what are generated from the saving bank account, it's far superior. And again, from a liquidity point of view, in one business day, these funds are accessible. So from that point of view, it makes a lot of sense to invest in liquid and overnight funds. Yes.
Okay, all right. So that's the general take, of course, because of the difference in interest rates in the returns on these two categories. Varun, let me come to you. Are liquid funds a good idea for parking your emergency funds then? And what should be the percentage of your emergency funds as a part of your overall savings or portfolio in that case?
Yeah, so Sonal, I'll take your second question first, right? I mean, in terms of what is the percentage of, let's say, portfolio that you should be looking at into parking into emergency funds. Typically, what we advise our clients is look at having at least 6 months worth of your expenses into an emergency fund that is easily accessible and that has a high degree of safety. Do not chase any sort of a superior returns over there. So that is typically what we would like to advise investors, that look at having 6 months worth of your expenses. If you want to be a lot more on the conservative side, maybe you have a professional job where it is not really stable, maybe look at pushing that up to about 9 months to about 12 months if you also have a lot of dependence on you. So that is what you should be looking at when you're thinking about emergency funds. Now, whether you want to put that emergency fund into a savings bank account, a fixed deposit, or a liquid fund, as we talked about earlier, there are two key criteria that you should look at when you want to invest your emergency fund. Number one, you should have a high degree of safety of your capital, since this is your hard-earned money and you would really require it at the time of emergency. And number two, it should be easily accessible. It should be highly liquid. It should not be locked away into, let's say, an asset class like real estate where it could take time to liquidate, right? And liquid funds actually ticks both of these boxes. There's a high degree of safety and you could have your money come into your bank account within one working day. And even taking that a step further, there's an Insta redemption facility of about 50,000 rupees where you get your money instantly into your bank account within the day itself. So that is how investors should look at emergency funds and how they should be parking that into a liquid fund or an overnight fund compared to a bank account.
Okay, take that point. Tarun, last question before we let you both go on this interesting conversation. How do costs compare in a liquid fund with that of a long-term fund or arbitrage funds? Do investors have to shell out more money versus a long-term fund maybe?
Yeah, so basically liquid fund and overnight funds basically require very less management and it's more like a very passive management, right? So from that point of view, the expense ratios are far lower, and due to the debt nature, I think they are available anywhere between 10 basis point to 30 basis point compared to long-term debt fund and arbitrage fund, which can go anywhere between 50 basis point to 1%. So from that point of view, there is a significant cost arbitrage. So if investors need to make a decision more from a suitability perspective, if they need the funds in anywhere between 1 day to 90 days, they need to look at overnight and liquid funds. But if they have, let's say, a 6 months to 1 year kind of horizon, in that case, arbitrage funds and other category of debt funds need to be explored.
All right, gentlemen, thank you so much for joining us today and shedding light on these two very important topics. One, of course, the new SEBI proposal or a new product category altogether, and the second, overnight and liquid funds. With that, we'll take your leave on this edition of MF Corner today. Stay tuned for Closing Bell to take you through the last hour of trade.
Co-powered by